Hey, folks, welcome to Markets Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, August 10th, 2011 is brought to you by Realtic. Alright, guys, a lot to discuss. We have a breakout in progress to the upside here. I want to show you this right off the bat. Take the high pivots from the course of the day and just connect them through, and you can clearly see if you connect this pivot high to this next little pivot high, right to these points, you have a little bit of a breakout across the board to the upside. In addition, what you can also do is take this pivot low right here and just put it right through the lows of the day, and you can say officially that triangular pattern is now a breakout to the upside. Now, first resistance is going to be this blue line. That's number one. So the question is, can it get through the highs of the day? And the market, again, is now back above the 115 level. My levels have been perfect in this market, folks. And again, if you want to get the inside scoop, if you want to get the same information the hedge funds get, take the free trial of the Research Center or the Intraday Stock Chat. We give it all to everyone. Whoever's a member gets it, and it doesn't matter if you're a hedge fund, an institutional player, or a regular investor. Bottom line is, look at this, folks. This is a perfect breakout. I just called this a little while ago on the blog. If you go to our Rant and Rave blog, you can actually see a post where I took a snapshot of it just breaking out right down here, and look at the results. Reading the charts like this makes you money. In any case, bottom line is, this is your first stop. It's almost there now. That's at 115.40. If it gets through 115.40, you have a chance to go up to this 117 to 118 level, which would be gap fill. I would not be surprised if the markets make a move up. I don't necessarily know if they'll close positive on the day, but a possibility of a small loss today or a gap fill is definitely in the cards, in my opinion. Now, it's key, and this is how I knew this was going to come, because even before, I just actually had talked to my chief market strategist partner, Nick Santiago, and I said, hey, Nick, you notice how the markets in this panic that's going on out there with Europe are not falling? They basically solidified and just chopped sideways. That's bullish. If you go to yesterday, if you go to the day before, if you go to the day before that in the trading world, the markets were constantly getting pounded down. Every little bounce was getting shorted or pushed down. That's not happening today. That's another signal. In addition, we called this pivot low yesterday. I literally saw this pivot, take a look, bottoming tail, and once you recaptured the 112 level, I said in the chat room, the rally is on, and people made a crap load. I repeat, a crap load of money going long all the way up for the end of the day. Today, I'm saying it again, folks. I don't necessarily know if it's going to be as big a push. I think ultimately you have to get through 115.40 right here, this blue line. If you get through that, then the rally is definitely on. It's going to stall there, as you can see it's doing now. But bottom line is, you have to take this as an actual positive for the market right now, that you're not breaking down. All right, you had a triangular pattern, and you actually have a break up. Now, should we break down later in the day and get below this line, then you actually could fall to the lows of the day. So, believe it or not, if I remove this upper line, this lower line now becomes everything on this market, in my opinion. You have to stay above that line, otherwise that would be a negation of the breakout. But bottom line is, right now you're dealing with a breakout, and it needs to get above the 115.40 level right here, and then it should see another squeeze to the upside. Markets again are down today. Dow is down about 265. Nasdaq is down 43. S&P down 23. Now, many people out there would say, "Oh no, this is scary. I'm panicking. Oh my goodness, sell all my long positions or stay out of the market or go short." Wrong. Why? Because technically speaking, you have a low pivot on the chart from yesterday. As long as this pivot low right down here does not get taken out, this pivot low from yesterday, which is 110.27 on the SPY, you have a pivot long in the market. And notice again, today's pullback, it makes sense, right? From 2:30 in the afternoon, in the last hour and a half yesterday, the markets rallied 700 points on the Dow. 700 in an hour and a half. You're telling me you don't expect a little bit of a pullback early in the day, maybe a 50% retrace after a 700-point rally in an hour and a half? Of course you do. So sure enough, what happens today? You basically do a 50% retrace down here, chop around. Notice how it's not breaking down. Notice how it's not breaking down. Then you take the pivot highs right here, connect them through, and there's your short-term breakout. It all makes sense, folks. The charts will teach you everything. It's basically like an open book. You just have to decipher the language. If you can read the language of the charts, you can be a zillionaire just by knowing how to do this stuff. All right. Now, again, the next step here in this market is there's two possibilities. One, it breaks through the blue line, in which case it goes towards gap fill right up here around 117, 118. If not, and you pull back in, if you get below this low pivot line that I put in as the lower portion of the triangle, and if you close below these moving averages there as well, then that's a negation of it, and you actually could go back to the lows of the day. I think that's less likely. I think actually we're on a rally mode here. I think we're going to have a push up here towards the end of the day. I don't necessarily think the markets are going to close positive, but I do think you could get close to that area, and there's a small chance chance of closing positive. That would be a big declaration. If you could get a secondary positive close today, that would be a huge signal to the markets that there's probably more upside in the coming days as well, especially if the markets can shake off everything that's going on in Europe. And by the way, what is going on in Europe? It is a catastrophe of epic proportions. You remember the U.S. in 2008 with the banks almost near collapse or collapsing? That's what's happening in Europe right now. Okay? So they're going through the same thing that's rattling the U.S. markets. But I think the key about the U.S. markets is that it's not the U.S. banks. It's the foreign banks. So the U.S. banks, even though they're down today, you have J.P. Morgan and Goldman down decently on the day. They're not down that much. JPM's down 2.5%. Goldman's down 6.5%. Bank of America, which has been getting crushed of late, down only 5%. Compared to some of these other bank stocks in Europe, which are down much, much more. DB was down over 10% at one point, although it has come off the lows. By the way, what type of pattern formation is this on DB, which is Deutsche Bank? Bottoming tail. If you had bought that bottoming tail, would you be up? If you had bought right here at the close of the bottoming tail? Oh, yeah, you'd be up. That was at $40.50. You'd be up over $1.25 right now. So again, read the charts. Let the charts dictate to you how to master the markets and make money. Okay? Good stuff out there, folks. Again, let me go back to the daily chart of the spiders. You can see the daily chart. I mean, it's a wacky chart, but if I zoom in, you have this reversal today. Notice how you're just retracing inside of that reversal. As long as this tail holds down here, it's good to go, as far as I'm concerned. And by the way, you have another tail because you're almost near the highs of the day here. You're not that far off. You have another tail. It's not a bottoming tail today because the bottoming tail has to be at the lows of the charts, but it is very, very close at this point. All right. What else do we have out there on the map? Let's take a look at a couple of the bigger players. ExxonMobil, I love it. Bottoming tail yesterday right here. Retrace, that's your buy. Anytime in the retrace, this was a buying opportunity today, in my opinion. Ultimately, I don't think we're taking out the lows from yesterday at this point or in the next couple days. I think there's actually a little bit of upside. Eventually, there will be another big shorting opportunity, but I just don't see it in the short term, to be honest. All right, let's take a look at gold. Gold is having a monstrous day, but believe it or not, you may have a topping tail on gold. If we close in this area, folks, this is a topping tail on gold, and in my opinion, you can short it. You can short the GLD at this point. Okay? So just be aware, assuming it closes here, and I'll put out that alert. If I do it in the afternoon, if I short gold today, I will put out that alert and give you guys all a heads up. If you're in the research center, you have to be at least a free trial member to get these alerts, obviously. All right, yesterday, what did I do? What was my one trade yesterday when the markets were bottoming out and I knew the reversal was happening? I bought Cisco. What price did I buy Cisco at, folks? I bought it at $13.45 right here, bottoming tail, and it's actually up today. Cisco is up. Now, they have earnings after the bell, so I'm going to probably sell before the earnings, even though I think earnings are going to be pretty good, better than expectations. I still am going to take profits because I'm almost up $1 on a $13 stock in one day. And anyone in the research center, I gave out that live call as I did it. Live call went out to the research center, hot charts and alerts, and they all got it too. So again, doesn't matter what ways the market's going. If you can find the right charts, you can make money. And that's what the bottom line is. So again, come join the free trial here at inthemoneystocks.com. Let's make some money, guys, and continue to watch this market move up. Take a look right here. Let's go back to the charts. You can see you're still out in breakout mode. You're pausing right below the blue line. Watch this 115.40 level. That gets taken out. You should go to about 117, in my opinion, by the end of the day. If you break below this lower trend line here sloping up, then you could go to the bottom of the day. All right? All right, guys, good stuff. It's been another nice, profitable day here at In the Money Stocks. We encourage you to come join us and take the free trial. Take care.